The broadcast is now starting. All attendees are in listen-only mode.
Hey, good morning, everybody. It's Mike Valtos from Orderflows, and welcome to a new year. I'll get started here in about a few seconds, just going through some last-minute checks, making sure everyone can see my screen okay, and my sound is working fine. So again, I just want to thank everybody for coming out on this third day of the new year, sort of the day where everyone's really sort of back in the sort of back in the saddle, back in the work mode. And same thing with the markets, right? We are finally open after this long holiday and everyone's sort of back at their trading desks and ready to go. So I'll get started here. Today, I'm going to be talking about uncovering hidden trading opportunities with order flow analysis. Now, order flow is a tool that helps traders understand really what's happening in the market. And that's important because a lot of traders, they just focus on price and price alone, and sometimes that's just not enough to really go on. You don't understand the intensity of a move, whether it's getting stronger or getting weaker. And today I'm going to explain how you could use order flow to help sort of decode some of that information that you're seeing on the chart. So basically three things I'll be covering in today's presentation. The first one is I'm going to talk about some of the advanced order flow analysis techniques for 2023. It's a new year. It's a time to, sort of take stock and expand on what you already know in the markets. Second thing I'll cover is leveraging the order flow to maximize your trade results. At the end of the day, you want to get as much as you can out of the markets. And, that's the whole point of trading, is to take advantage of what you're seeing in the markets to make money. Right? We don't trade the markets to lose money or give away our money. We approach the markets because, we want to earn money from the markets. And lastly, I want to show you how to, take even though it says the same thing there, it's the third point is I'm going to show you how to sort of put it all together in the analysis, right? So that you can become a better trader. Now, professional traders have been using order flow trading strategies for years to help them maximize profits and minimize losses. And today I'm delighted to share with you some of these strategies that I learned from my over 20 years trading on institutional trading desks. Strategies that are relatively unknown outside of the institutional world. And nowadays, what's great about the markets is now everyday retail traders, right? You and me, I consider myself now a retail trader, can take advantage of, the hidden order flows that's taking place in the market. And this insight, what I was sharing with you today, may at first glance seem complex and intimidating, especially if you're new to order flow and you don't really understand what you're looking at. But with careful study and plenty of practice, taking advantage of the order flow is both possible and achievable. And that's what I'm going to show you how to do today. Now, but first, for those of you that are new to one of my presentations, thank you for taking the time out of your day to come. But I just want to explain who I am and where my experience comes from. Now, I've got over 20 years of institutional trading experience. I started on the CME trading floor, literally at the bottom of the industry as a runner with Dean Witter. Then eventually I started working my way up, and while I was still with Dean Witter, I left the trading floor to work on the electronic trading desk, right? When the electronic trading really started taking off with the exchanges, right? CME had the Globex, Board of Trade had Project A, NYMEX, Colmex had Access. And, it was back in those early 90s when electronic trading was just starting out, and I saw it as a great opportunity. I didn't realize that one day it would just take over the world pretty quick. I mean, it was really just a matter of about 5 years that it really shifted from the floor to going fully electronic. After Dean Witter, I joined EDF Man, the big commodity trading firm out of England, right? They've been around since the 1700s. I worked there for almost 2 years on their global macro trading desk, where, we traded pretty much every commodity futures product possible in the world. After EF Man, I joined Commerzbank when the big German banks, dominated the markets. This is sort of in the time, sort of right when the euro was starting up, and the big German banks were dominating Europe in terms of trading volumes. And I was the licensed Eurex trader there for 3 years, and I traded, everything on the yield curve against the U.S. markets, Bunds, Bobbles, Schatz against twos, tens, fives and the 30-year bonds, as well as DAX against E-minis and Euro stocks also against E-minis. After Commerzbank, I joined Cargill, the big American trading firm. It's one of the largest privately held companies in the world. If it was publicly held, it would probably rank second or third in the United States. And again, there, we traded every possible futures contract in the world. And I spent 4 years there. They sent me out to Singapore to set up a trading desk when the Singapore exchange was closing. And they needed to go have an electronic trading desk there in Singapore. So I left Chicago to go work in Singapore. After setting up that trading desk, after about a year, I left. And eventually I joined JP Morgan in Singapore as vice president of futures trading. I spent 8 years there on the trading desk. Now, all these jobs were actual trading desks, trading electronically. And so, I've learned how to use the dome. I've learned how to read the depth of the market, resting liquidity, all that stuff at a time when it was brand new to a lot of people. And I've had the very good fortune of working with others that were also very good traders. And, we share our knowledge. And, it's from there that I sort of grew into this, order flow trading expert. I wrote a book on trading order flow. And if you stick around to the end, I'm going to show you how to get a copy of that book. But what's most important is I'm one of only a handful of traders, former institutional traders, who have mastered both trading order flow and teaching it to retail traders all over the world. So get ready, as I'm about to share with you some of my most valuable methods of order flow analysis that's going to help you become a more successful trader. So I want to take you and show you the exact steps you need to follow to start immediately taking advantage of that institutional order flow that's taking place in the markets every trading day. Now, before we begin, a brief disclaimer. I do want you to understand trading does involve risks, and there are risks involved in trading. You should only trade with money you could afford to lose or money that you don't require to live off of. Sometimes I see people, it's almost like they have a race against time. Like, oh, Mike, I lost my job. I've never traded before, but I want to become a trader. Can you teach me how to become a trader in a month before my money runs out and I got to get a job? Well, you're not putting yourself in a good position for success, right? And that's not how you should approach trading. Right, just as anything in life, trading is a profession for a lot of people, and they spend a lot of time learning how to trade effectively. So it's, there are some people that just pick it up like a fish to water, but for the majority of people, being successful at anything in life takes work. So the first thing I'll talk about is advanced order flow analysis techniques for 2023, right? It's a new year, and advanced order flow analysis techniques are going to be more important than ever as the markets become increasingly more complex and global. Now, recent advancements in things like artificial intelligence-based technologies have enhanced the ability to interpret order flow patterns, while market microstructure theory has illuminated trade execution mechanics and informed strategies on where order flow originates from. Now, that's a lot of words, word salad, but, when you're looking at the order flow, right, in the past, people would just look at a simple order flow footprint chart such as this. And, they'd have information like the delta, the cumulative delta, the volume, and, people would have access to things like max delta and min delta. But a lot of people never really used it because they never really understood what it means. And today I'm going to get into that internal delta, so to speak, right? The max delta, the min delta, and its relationship to what's actually taking place in the bar. So max delta will often appear, on the bottom of your chart underneath your normal delta. It'll say max delta, min delta. Max delta is how strong delta was in a bar, the strongest it was. Min delta is the opposite, how strong it was negative delta. What that means is positive delta is the aggressive buying taking place. Negative delta is the aggressive selling taking place. Okay, so the market's straight in a two-way auction, and there's a bid, there's an offer. So if someone buys the offer, right, that registers as +1 on the delta. If someone sells at the market and sells into the bid, that registers as -1 delta because you have an aggressive seller. Now, what max delta does is it gives you the value of how sort of the peak of the aggressive buying, how strong it was. So when you see a number like, 25 on the max delta, it tells you at one point the strongest the aggressive buyers were in that par was 25 contracts more than the aggressive selling, right? If you see a volume of, 1285, that tells you that there was 1,285 at one point, 1,285 more aggressive buyers than sellers in the bar. Now the min delta is kind of the opposite. It tells you how strong aggressive sellers were. So if you see a min delta of minus 18, it's going to tell you that there was the strongest this aggressive sign was in the bar was just minus 18 contracts, meaning there was 18 more aggressive sellers than buyers, which is not very strong. But if you have a number like, minus 1202, 1,202 as your min delta, that tells you that it was, 1,202 more aggressive sellers than buyers at one point in that bar. So that's information that you can use and analyze. Okay, it's a data point. And this is E-minis. This is on the last trading day of the year when we made that low, 38.21 and a half, and we started moving up. But as we came down into this low, there was something interesting happening internally in the deltas, the max deltas, the min deltas, and where the final delta ended. And what you're seeing is on the new low here at 38.21 and a half, right, we had positive delta. But positive delta was 1268. Now, if you're just looking at delta, how people would analyze it in the past is, oh, you got a new low, you got positive delta, that's a bullish sign. Okay, well, earlier you had a new low here with positive delta, the market still made a new low. Okay, so just taking the delta by itself is okay, but you really want to sort of take a look at how the delta was formed. All right, so we look at this bar. The first time we hit the low, it's got a delta of 75, but it's got a min delta of minus 400, a max delta of 88. So, okay, I mean, we there was aggressive buying in the bar. Obviously, you got the positive delta. There was more aggressive selling in the bar, obviously minus 411 on the min delta. But we ended up with kind of a smallish delta. Okay, again, just because you have a positive delta doesn't mean it's an automatic buy. You want something that's going to give you more of a reason to potentially get long off of a low. So we sold off. We made a new low by almost 4 or 5 points, and on our new low here, okay, now we got again positive delta. If we take a little step further and take a look at what's happened in the bar, well, in this bar, there's very little net aggressive selling. It was just minus 18, which tells me that there wasn't much aggressive selling anymore after this big sharp move down. Okay, but more importantly, now we start looking at the relationship to max delta and final delta. Max delta was 1285, final delta was 1268. Okay, and what's different between this bar and the previous low is this colored magenta, right? I like to use colors because I'm very visual when you're looking at the order flow. 1268 is telling me it's closing within a certain percentage. It's 95% of the max delta. The final delta is closing. So if it's magenta, it's telling me it's very strong. We're closing it right near our strongest max delta level, which is going to be bullish, right? So you're at your low of the day. You have a very strong delta in the sense of where it's closing relative to its max delta. Same thing in the next bar, very strong positive delta, 615. The max delta was 621. So we're closing within the 95th percentile of its max delta, which is indicating, it's a strong sign. And you can see how the market reacted. Earlier, we didn't quite get in that area, 75 against 88, and the market made a new low. Now, I know some people are going to say, but Mike, what about this red candle here? It's got a strong negative delta, right? It's magenta. If it was strong positive, it would be the cyan color. If it was strong negative, it would be this magenta color. Well, the market's selling off, right? And as the market is selling off, you expect to see negative deltas. You expect to see strong negative deltas as well. So coming into a low to see a strong negative delta is something that you expect to see. However, we make a new low and I see strong positive delta, right? What is positive delta? It's a sign of aggressive buying. So you're at your low. What do you think is going to be more important? Strong aggressive selling or strong aggressive buying? Well, you already know the market's been selling off. You expect to see that strong aggressive selling taking place. But when you see strong aggressive buying taking place at the low, you know, that's your cue. That's your sign. The market is just screaming to you, hey, you know what? You should be getting long here. We're at the low, but now we're attracting buyers, but not just buyers. We're attracting strong aggressive buyers coming in. And the market put in a nice rally after that. And just again, just sort of to point it out, here's a market that is selling off, right? And you see, it's just the negative deltas, right? And when you do have some positive delta bars coming in, it's not strong, right? It's not, it's just, okay, maybe some people are taking profits. Oftentimes that's what you see after a strong move down is profit taking, people coming in and covering their shorts. But that's the difference between this low and this low. People are probably taking some profits in here. But this one, people are saying, hey, you know what? This move is over exaggerated. They're coming in and they're being aggressive and coming out in full force. Right. And again, as this move is going down, you're seeing the strong negative deltas, right? The magenta color, right? And when you do get the positive deltas, it's just normal delta. Okay, so this is 10 years. Now, this is on a 5-minute chart. And the same concepts would apply whether you're trading 10 years, crude oil, gold, E-minis, MES, NASDAQ, Dow, corn, wheat. You're really looking at a lot of the same things in the order flow. So here's a market, right? This is 10 years. Came down, made a new low, and is just going sideways. And then it gets a little pop here. Well, okay, you got the big push down, a nice strong negative delta going sideways, sort of making another little push down to the low here at 16 and a half. We get down to 18, got a strong negative delta, minus 3168. The mid delta is minus 3200. It's magenta color. Okay, I don't really need to focus too much on the individual numbers just because I'm focusing on the colors of the delta. Is that's telling me it's within a certain percentage. Okay, because when you're dealing in percentages, you don't necessarily need to know the actual numbers themselves. So what do we know? We're at the low. We had some strong selling initially, and then we just sort of go sideways. We get a potential another push down with some strong selling, but we can't even take out that low of the bar with the strong selling, and we just go sideways. Now I see one bar with strong aggressive buying. Okay, it's not at the low, but it's off of the low. It's coming in just a few ticks off the low. Maybe you're not convinced here. Okay, you wait. And then another bar comes in, strong aggressive buying. Again, you see the delta is colored cyan, right? And later I'm going to talk about, well, I can talk about it now here, the delta divided by volume. One of the things that we've learned in order flow over the last several years that we've put into the software is when I have, not only do I have a strong delta in terms of max min ratio, but when I have the delta as a certain percentage of the volume, right? When it's over a certain percentage, that's actually also bullish, right? So in this case, we have the delta of 1347 divided into the volume, 3559, that's 37%, right? That's a bullish reading, okay? Just as over here, you had a bearish reading of 32%. So not only do I have the delta itself being bullish, but I have the delta volume also being bullish. Okay, now this market is starting to tick higher. This bar ticks one tick higher. Remember here you had a bearish bar, but the market doesn't even go any lower, right? That's a sign that maybe the selling is done with for now. And we're starting to see that aggressive buying coming in. A similar bar here, strong final delta and strong delta volume. And the market sort of just grinds its way up and up, right? This is 10 years. 10 years, don't always make these big, fantastic moves the way other markets do. It's a grinding market oftentimes. Okay, so this is bonds. Okay, so we're selling off, right? Making new lows, making new lows. You're looking for a sign of potential. This market is finally going to move away from this low. You got a green bar here, got a green bar here, but the market doesn't go anywhere. Now this bar, again, it looked potentially like maybe there's aggressive buying. We're closing our final delta at 439, which is what our max delta was. So it's colored cyan, which is a good sign. But again, you need to see follow through in the next bar. The next bar doesn't even go any higher. Now it's running into a resistance area where you had that stack selling imbalance. So that's not a good sign if you're looking for this market to go up. But at least I got this one bullish bar. Maybe this market can start to rally. The fact that the next bar doesn't even tick one tick higher is not a good sign. I don't get long just because I see a bullish delta by itself. What I want to see is some follow through in the market, right? I want to see the market start to move a little bit higher over at least the next bar or the bar afterwards. I like to give it at least 2 bars maximum, because it might not happen on the immediate bar, but at least by the next bar, it should be moving higher. You make that new low, okay, and then it starts going sideways, drifting a little bit up. So we made a new low here at 815, 820. We tag that low again. Now here we're starting to move higher. What do I see on the delta volume? It's quite high. So even though I don't have a final delta that's cyan color, that's a strong delta, I do have the delta volume being very strong, 44%, right? So close to half of that bar's volume is positive delta, 44% is, which is a very strong reading. I mean, normally it's going to be somewhere between, 5 to 15%. And when you start seeing numbers, 44%, that's quite strong, especially off of the low. Then the next bar doesn't go any higher, it just goes inside, and then it pops in this bar here. And when this bar pops, not only that, you have a nice strong final delta, 623, and that's at what your max delta was, 623. So it's closing right on its max delta, and the market works its way up. So how can it help you is, again, on markets moving up, you're expecting to see strong deltas, okay? That's what you expect to see. But when markets sort of top out and are starting to go sideways after a move up, you got to start looking for reasons, signs of weakness in the market, okay? Because that's what's going to give you a sign that maybe this market is going to start to sell off. And after we make that move up, this is going sideways, and then we start dropping it. But as we start going down, right, in this bar, the delta volume, minus 28. The final delta is minus 495, or sorry, 491. The min delta is minus 495. So not only do I have strong negative delta that's closing near our min delta, but I also got strong delta divided by volume. Okay. Now, another thing that we did also is we highlight when the max or min delta is very small. Okay, so also that's why you see a 0, right? This white color area, this white color, max deltas here. It's telling me there was at no point in this bar, by it being 0, that aggressive sellers were ever in control. So what do I have? Market went up, market's going sideways, it's starting to break, and as it starts to break, it's just all aggressive selling, essentially, no aggressive buying, right? Because the bar was never had a positive delta at all, 0. The delta volume is also strong negative. Well, if I got all that negativity sort of hanging on in the market just after we make a high and we go sideways, well, chances are the market's going to drop, and it loses a quick 5 points very quickly. And again, anytime you're coming into a low, you want to be looking for a reason to get long, right? Yeah, I just find it easier to buy lows if there's a reason to buy the low. I'm not trying to predict a low or pick a low, but if the market is coming back down, testing a low, then I start seeing signs in the delta, the delta volume getting strong, 45%, 27%, 31%, and the deltas, the final deltas also being cyan. I know that the aggressive buyers are stepping up, right? They're coming into the market in force, getting ready to buy, and this market has this nice rally. Um, this is this, what is this, 77, 90, 78 bucks all the way, quickly all the way up to 78.40, pulls back a little bit, goes higher all the way up to the 60 area. So that's how, some of the newer developments that we've developed in order flow analysis. Now it's interesting because I see some other softwares have started to adapt what I'm teaching you here into their software, but ironically they just put it in there, but they don't even tell you how to use it, which is kind of um, pointless, right? I mean, all the tools that we've put in our order flows trader software are the tools that I've used in trading, tools that ways that I look at the order flow to help me analyze what's taking place in the market. So the second thing that I want to talk about is using order flow to reveal hidden opportunities. Now, traders can uncover hidden opportunities that would otherwise remain unnoticed by looking at the order flow. So being able to read the order flow gives you a significant advantage, as it's going to reveal what prices and volumes are being bought and sold by the major funds and commercial banks. So knowing this is going to enable you to position yourself at the start of a large move before it becomes visible on the price chart. Now, order flow analysis also allows traders to detect smaller inconsistencies in the market before they become apparent on chart-based systems, systems that only look at price. So by recognizing these discrepancies, trading strategies can be optimized and potentially create larger profits. When you're looking at a normal bar chart, really, what do you see? Well, you see the open, the high, the low, the close, and the relationship from the open to the close. You're seeing where price traded. And, people for centuries, candlesticks have been around since, 1600s as a form of charting. I've always tried to decipher, what the wicks mean and things like that. And for me, it's really sort of missing the surface. And the way I like to describe it is it's like a race. Okay, we all focus on the person out in front, right? The guy that crosses the finish line the first, but it's a race with a lot of people, right? And where it's interesting is what's happening during the race, not just who's in first, but fifth, sixth, seven, eight, nine, 10, that jockeying for position, because that's what's taking place in the market all day long. When you're looking at a price chart, you're just looking at, where the leader is, so to speak, where's price going, but you're not looking at how did it, the route it took to get there, over other traders or, over other competitors. And that's why I say, it's not necessarily just about following the leader. It's about understanding what's taking place everywhere else in the race. The race for third, the race for sixth, the race for eighth. There's always people jockeying for position. And there's a lot of internal movement taking place by the institutional traders in the market, right? The big traders, the traders that are going to move the market. So one of the things that we developed last year, or I think over a year ago, that we put in the software, but it's still very important. And because it's telling you, hey, this is where the institutional traders are active inside the bar. And you're going to look for this activity in the market and, apply it with order flow. So what we do, we have this thing called order flow sequencing. Okay. And really what it is, there's bullish sequencing, there's bearish sequencing. It's when a trader comes in and takes out subsequent higher bids in the, or selling it down like through bids. So markets are, bid offer. Okay. So say it's, I don't know, 21 bid for 50, 20 bid for 60, 19 bid for 100, 18 bid for 200, right? That's subsequent higher bids, and a seller comes in and just wipes it all out. Okay, that's what we call sequencing. Just as the offers, If there's more and more offers on the way up at each price level, higher, there's more offer, next level, more offer than the previous level, so on, and a trader comes and takes it out, is, you know, what that's telling you, what the market is projecting to you, is that you have a big buyer. He doesn't care what's there in the market. He's clearing it all out. And you often see that happen in strong moves. It's a sign of strength in the market. So what we do is we color that section of the bar magenta. So it's just very easy to see, right? I mean, we try to make it as visual as possible so it's easy for traders to see. And, you can see here, it takes out 28, takes out 115, 119, 121, 139. More and more volume on the way down. It's just clearing it out with impunity. Right? And you see that often as the market's moving down. So it's giving you a sign of strength in the market. Okay, here's another example. Right? This is a 5-minute chart, right? Market looks like it's going sideways, but right, you had this drop here down to 21 and a half from 40s. But if you're watching what's happening up in here while it's going sideways, you see there's heavy selling taking place. There's traders coming in and just clearing out the order book that's got strong liquidity resting in the market. And if you know this, right, then you could take advantage of this move. Right? You don't want to be having seen the market drop from 38.44 down to 38.34 and think, oh, now it's time for me to get short. No, you want to be getting short up here at 38.44 when it looks like the market is just going sideways. But by watching the order flow, you know that you have strong institutional selling taking place in the market, and then the market drops. Right, that's the edge order flow is going to give you. And again, similar thing here, right? It looked like the market, it hit that low, starting to go sideways. Some institutional selling taking place here, even here, and the market dropped a little bit. We didn't take out this low, but again, the market dropped again from the 32 area down into the mid 20s. Gold, right? Same thing you're looking at in E-minis, bonds, 10s, 5s, corn, wheat. You look at in other markets, gold, right? Markets going up, right? I see strong institutional buying, right? That's these cyan zones. Obviously, I see the deltas as well. Then I hit the high of the day, but the bar right off the high, because again, you're at the high of the day. So what's in your mind? What should you be thinking? What should you be focusing on? Is this going to be the high of the day? Or is the market going to react and sell off? Well, what happens? You hit the high of the day, next bar, as it opens, the strong aggressive selling comes in right up in here. You got bearish sequencing. That's why this is colored out. And the market drops. Okay. I mean, if you're trading this, where you place your stop is just on the other side of that sequencing, right? Just as if you're getting long on this bullish sequencing down here, right? You just place your stop below the sequencing. It's just trade what the market is telling you. Crude oil, same thing, right? Market had this little move up, starting to go sideways. Now you're seeing the institutional trading coming in here, and then the market drops. Then it met institutional buying, market rallies, goes sideways. Institutional selling coming in here, market drops again. I mean, don't make trading more complicated than it needs to be, right? Just trade what the market is telling you, basically. Now, another thing that I want to talk about is market weakness. Okay. Everyone always said, buy the dip, but you try to buy this dip and the market keeps dipping, right? That's the problem with buying the dip is oftentimes there's still more dipping to take place. But what if there was a way that you can look at this sell-off and think, hey, it's going sideways rather than get long, you get short. Well, there is, right? It's by looking at the delta. Now, I know what some people are going to say. Mike, you just explained, the cyan colors here. Okay, 32, 33, delta volume, strong deltas, cyan color, cyan. Yeah, I mean, up until this bar here, it's looking kind of bullish, right? I would be interested in buying that as well. Off of, we've sort of come down in here, we hit a swing low, we're starting to go sideways. I'm seeing some signs of buying. But what I see here all of a sudden taking place is weakness. Because remember, for a market to move up, in this case, you need strong aggressive buying to take place. Market's not going to go up on, I mean, it can go up in one bar, it could have negative delta, but it's not going to rally on bars of consecutive negative delta. So you'll be looking at the delta to be stronger each bar, or at least positive and sort of, somewhere around it. But what you're seeing here, you came down and then you see some signs of positive delta, 123, 109, 119. All of a sudden it's starting to decrease. It's getting weaker, 57, 10, 5, -2, -179, -200. That's what caused the market to sell off. It didn't sell off for any other reason that there was no more aggressive buying. So if you don't have the aggressive buying in the market, who's going to take the market higher? It's not going to just magically go up. You need that buying. So while these two bars in here looked bullish, you're not getting any more aggressive buying coming in. Yeah, you had that burst of aggressive buying, and sometimes that's enough to kickstart it to get it to go up. But now we're seeing it just sort of weaken in here. That aggressive buying has been removed from the market. It's done. That aggressive buying is done. And now you're seeing weakness take place in the market and the market sell off. So if you're trying to buy this dip, initially I thought it was potentially a nice dip to buy. But by paying attention to how the delta was shaping up, the lack of aggressive buying, I'll say lack of aggressive buying taking place, but rather the lack of aggressive growth buying taking place, getting weaker instead of getting stronger, that's a negative sign. And the market, immediately dropped 10 points. But having software that could highlight that to you removes that form of analysis off your plate and just will highlight it to you that, hey, you know what, there's weakness here in the market. So that you can, if you were long, you could recognize that and get out and get short basically as soon as you can, rather than take a full stop out, because the order flow is telling you, hey, you know what, the conditions for this trade have changed. So, like I said, trading is less stressful when you know which dips to buy. Right? Market went up, pulls back, strong selling, right? You're seeing strong negative delta readings. But then, even though you got the strong negative deltas, it's getting weaker and weaker, right? It went from, minus, at this high where it turned minus 588 delta to minus just 158 to minus 171 to minus 159 to minus just 85. Then the aggressive buying pops in here and the market starts. This is just this morning. It's 7:50 this morning to catch a nice, 5-6 point move here over 10, 15 minutes. Bonds this morning, right? Came down in here, sort of, almost a double bottom. But as this market is selling off into this double bottom here, what's happened is the delta is weakening. That aggressive selling is getting weaker and weaker as the market is selling off. And so imagine, right, market is selling off, but buyers are just dropping off at the wayside. So instead of selling off and having more more sellers coming in as the market is going down, which is what you want to see for a market to go down, as the market is going down, the sellers are falling off. It's getting less sellers each bar, less sellers, less sellers. And that's a sign of, even though we call it market strength, it's really a sign of lack of aggressive selling, which in turn, once that aggressive selling is gone, the market is going to sort of revert back to where it should be. And we actually rallied up from this level to new highs of the day. That was this morning in the bonds. Now I had to scrunch this chart. This was crude oil this morning, just a few hours ago. Well, more than a few hours ago, about 4 in the morning until about 5:30. Okay. But here you got the weakness. Sells off again from, we're talking 79. This is 79.60 in here, all the way down to 78.80 here, where you get the bullish signal, right? That selling was finally tapering off, right? Selling was over, and then the market rallied again from, the $79 area back up to 79.50. So you could have caught that move down and that move back up. But let's dig a little bit deeper, right? This market, this is that same chart. This was the first, this is this area here. Okay. Market was sort of balancing in here. And as you're coming out of balance, the selling is just, sorry, the aggressive buying is just not present anymore. And then the aggressive selling takes over and we immediately, drop over $1. Then after that big move down, right, this is here, this bar, right, is this chart here. After the big move down, market's shouting out at you. I mean, look at that big, almost capitulation bar, minus 544 delta. Then the next bar, it drops down to just minus 43 delta. And then minus 21 as the market starts reversing. We're getting a bunch of buying imbalances taking place. But once you know that, hey, you know what, this selling is over, because, a lot of times people see a big negative delta and they get more bearish. Well, okay, you can get bearish off of the negative delta, but you really got to watch what's happening after that. Is it still a strong negative delta taking place, or is it gone? Is that selling been removed from the market? And it has been, right? There's nobody else is interested in selling down here. And then eventually the delta, it turns positive and the market starts to rally. So the last thing I'll talk about is leveraging the order flow to maximize trade results. I mean, because it's one thing to know order flow, but then you got to start putting the pieces together, right? I've showed you several ways to use the order flow. And at the end of the day, you sort of got to put the pieces of the puzzle together. And that's what separates good traders from break-even traders or even losing traders, is being able to put the pieces together and understand, what you're looking at and take good trades. So knowing how to leverage order flow might just be the edge that propels you from that average trader to a consistently successful one. So by understanding the relationship of order flow such as delta, point of control, and imbalances, traders gain insight into the market. So you got to start putting everything together. Okay, this was this morning where you had this quick pop up. I mean, obviously now we sold off after this, but there was a good 4 or 5 points to be had in this quick move here, right? These are those moves that you like to see as a trader, right? As soon as you get in, boom, straight to your take profit in a minute or two. But what were the signs? Okay, well, this market was just sort of going sideways, going nowhere, sort of drifting down. Then you get that green bar here. You get that nice delta number 209. Okay, people say, what about this bar here? Well, it's a red candle with positive delta, and that means something else. But now we're just sort of going sideways, and I see a nice positive delta. I see 209 delta, max delta was 210, so it's closing almost right on its max delta. I see the min delta was just -3, so I see basically no aggressive selling. I mean, there was -3 contracts in there. And more importantly, I got 1, 2, 3, 4, 5 buying imbalances in here, right? For me, that's an easy trade to take. And, you're getting long somewhere around 80, and it just moves up quickly to 85. Okay, this was a little bit earlier in the morning, right? Market looks like it's just sort of going sideways in here. And it was, right? From 530 to almost 540, it's just hanging around 92 to 94. And then it drops, right? It drops from, the 92 area down all the way into the 72, a 20-point drop in, again, this is a 1-minute chart. So it's taking place in 1, 2, 3, 4 minutes, 20 points. It's insane in the way this market is. But what were the signs? Okay. You got that big bar here, right? You got 1, 2, 3, 4, 5, 6 selling imbalances. Okay. Now I haven't spent much time on talking about imbalances. That's one of the basics of order flow. Most traders already know. But if you're not really familiar with the buying or selling imbalances, watch some of my videos on my YouTube channel. I spend a lot of time talking about that. The delta volume, -25. So the final delta is -244, which is off of -259. So it's not within 95%. But I know the delta, the total delta volume going into the volume itself is over 25%, just barely, which is a strong negative reading. I know that I have no aggressive buying in this bar because I have a zero here. That's what the white highlights to me, that, hey, you know what? It was zero. There was no aggressive buying. So what do I got? I got a market going sideways. I start seeing some aggressive selling taking place. Maybe I'm not convinced yet. Maybe there's some selling. Maybe it's going to revert back up to this 94. Then obviously the next bar, big stack selling imbalance. You got like 10 imbalances in this bar. This big stack selling imbalance. Now the delta is magenta color. It's minus 683 versus 700 on the min delta. So I know that this bar is got strong selling in it. It's got 3 positive delta. It's white color, so it's telling it's just highlighting to me that it's got a very small max delta. So it's telling me aggressive buyers never really had control of this bar. It's been dominated by aggressive selling. So even if you're getting short here to 84, a quick 10 points down to 74 in the next 2 minutes. Okay, that's how, once you start putting it together, you can start to see, how what the market is telling you, basically, right? That's all you got to do, is just trade what the market is telling you. So here, right, market sold off, starts going sideways, starts catching a bid, right? Starts trading up, and what do you see on this move up? Three green candles, nice positive deltas closing right near our max deltas. Even this last one, I've got bullish sequencing, so I know more and more volumes are being taken out to the upside. Again, this is just before 6 o'clock in the morning this morning. The delta volume 30 into 82, it's over 25%. It's actually 36%. So I got a lot of bullish activity taking place at the swing low. You're getting long somewhere in here, 79.20. This is 20 here. And it moves right up to 50. Again, within about 15 minutes. Again, trade what you see, right? These are those bars that you love as a trader, okay, where it moves from 80, 90 all the way up to 81.40, a 50-cent move in crude oil in one bar on a 1-minute chart. What are the signs? Well, you could see it in here, right? As this market is just sort of going sideways. I got bullish sequencing here. I've got bullish delta, right? The cyan color, 79.88. It's closing near our max deltas. I see very small min deltas. I see a 0 here. I see a -1. I see the delta volumes. 33% of the volume is the positive delta. 35 is positive delta. 40 is positive delta, right? Obviously, I see more imbalances taking place in that part, but I've got a lot of bullish activity taking place just in this little spurt here. That, yeah, okay, you get long and then boom, immediately just jumps up in the next bar, goes parabolic. And then you these are those moves that it hits your take profit before you could even adjust it to a wider take profit based off of what you're seeing on the order flow. And then you get some stopping volume here. This is a very bearish bar. You got heavy liquidity up here, 241, and then the market reacts to that. Right, again, this is a very bearish signal right here at 81.50. It's telling me there's stopping volume in the market, that point of control up there, and the volume, and the market sells off from there. So you could have caught this move up, and some of this move back down. Now, traders get bored in sideways markets. They're like, the market's boring. But when you read the order flow, that's where moves, you understand that that's where moves happen from, is when you see sideways activity in the market. And you're starting off, it's just sort of going sideways. You get some nice bearish sequencing taking place here, nice bearish delta. And then market just continues to go sideways. Now it's starting to reverse. So even if you're short off of this bar, you can recognize, obviously it's gone sideways over the next 3 bars, but now you're recognizing that the bullish order flow is coming in, right? You can see the bullish deltas. You see the bullish delta into volume over this bar, this bar. Obviously, you got a lot of buying imbalances. This is Bunds this morning. You got 1, 2, 3 here. You got 1, 2, 3 here. This bar's got 1, 2, 3, 4, 5, 6, 7, 8 buying imbalances in it. And again, the delta volume, 54%. That's quite high. And what happens? So even if you're short here, you could recognize that the order flow is changing in here. Cut your loss. That's how you cut your loss early. I don't want to say, every single trade I'm showing you is going to be a winner. There's times where it looks like, yeah, you know what, this is bearish. You get short, but it's all about controlling your losses. You got to cut it, right? Then you got to recognize that the order flow has turned bullish and you're getting long 134, you know, 25 or 20 down in here, anywhere in here. Actually, you could get long before this bar even starts. But we'll just call it here at 25, and it's a move all the way up to 50. So even though you get short here at 10, maybe you covered around 15, 16, 17, it's 25-point move right after that. And a lot of those moves happen as the market is coming out of sideways activity. Now, this is something that gets lost on a lot of traders, especially when they use order flow, especially software that hasn't been developed by me, because they're not, I don't like to say that I sell a software package, because I provide a lot of education and a lot of live training, weekly for users. And when you see people say, well, okay, you got bullish delta here, right? 2, right? And it's got a bullish delta volume, 50%. Oh, that's quite big. Well, you also got to take it in context. It's traded 4 contracts, right? This is at 2 in the morning. This is bonds. So there's 4 contracts traded, and it's got a delta of 2. That doesn't mean it's bullish. It's just, you can't make a good decision based off of that. You want to see some decent volumes. Now the next bar, yeah, 170 is decent, but when you get over here, you're starting to see some more, I'll say decent volumes, but good ones, 35, 61, 133, that you could base your decision off of, just as here. Again, maybe you got short off of these 3 bars here with the negative delta volume. I definitely wouldn't get long off of a bar that's got 4 contracts traded. He's got some more volume traded. Okay, maybe get short here, but then you recognize it's going sideways. Okay, then you start to see some bullish thing. You cover it, right? You even got a stacked balance here at 248 in the morning. You cover your trade, right? You get out. You don't wait for it to come back, right? That's trading. Being successful is about being able to manage your risk, and it's funny because if you, I like to read trading biographies. I like to read biographies of just people, and I spend a lot of time reading biographies of successful traders. Now, there are, you read Market Wizards, okay? That's a simple book to read in terms of biographies, because there's a lot there. And while for many of those traders, there's usually like one big singular win that sort of propelled them from average trader to becoming a professional trader, being alive in the market for a long time. But after that one big win, then they start talking about managing risk, right? Once they got to that level. So it's not like big win after big win after big win after big win. A lot of it is the grind, right? The daily trading back and forth of cutting your losses short, so that when the opportunity for that big win comes in, you're positioned, right, to take advantage of it. So say you get short in here and it's going sideways, okay, you cut your loss when the bullish order flow comes in, so that when the bullish order flow comes in, you're able to recognize it and capitalize it, as opposed to still being married to that lousy trade. Okay, now context. Okay, put it all the trades in context. So this is minis this morning, micros rather, MES. Market rallied up, and you came up to a swing high. Now I got bearish sequencing coming in. I've got bearish deltas coming in, right? To me, that's a sign I want to get short, right? I mean, even though here you got some bullish signs, bullish delta, bullish delta. Okay, market is kind of in a range. Maybe you could take it. If you take it, it's got a little bit of a move. But once you recognize that we sort of break out to this new high and we start turning, recognizing the turn is taking place, then you start seeing the negative deltas coming in. That's your sign to get short, right? It's not your sign that, oh, maybe this is just a little pullback and I should get long. No, that's your sign to pile in and ride it out, right? And it drops again another quick 10 points this morning in the E-minis. There's a lot of 10, 20-point moves this morning in the E-minis. And this is the chart I showed you earlier, right? The market weakness in the sense of the aggressive selling, or sorry, the aggressive buying getting weak before the aggressive selling takes place. So imagine, right? Market is sort of drifting down. It's got some aggressive selling. The aggressive selling lightens up. Some aggressive buying does come in, but that aggressive buying has come in and it's just sort of dropping by the wayside. The aggressive buyers are dropping off one by one, and then eventually there's no more aggressive buying and the market starts drifting down. But as it starts drifting down, aggressive sellers are piling in here. You can see the delta volumes 40, what is that? 41, 56, 56. The deltas are closing on our right near our max, or sorry, our min delta numbers, which is bearish. And the max deltas are basically zero. These three bars, no aggressive buyers. This one had a 1, 0 max delta, 0 max delta. But again, the early signs were in here that there was drying up aggressive buying. This is a dip you can buy, right? Market rallies, it starts dipping, okay? The aggressive selling that you're seeing coming in here is drying up. Now you got some strength appearing. That's what this line is telling you, that, hey, you know what? That aggressive selling that was there on this market dipping is gone, right? This is a dip you want to buy. Now, I put this one in there because, again, sometimes it's confusing. People like to throw different things on order flow up on the chart without really understanding, should I have it on my chart or not? And where it gets confusing for some people is when they see a lot of buying and selling imbalances in every single bar. Like this bar's got 2 selling imbalances. This bar's got 3 buying imbalances. This one's got 2 selling imbalances. This one's got 6 buying imbalances. Then it's followed by a bar with 4 selling imbalances, followed by a bar with 3 buying imbalances. And it's just confusing, right? Because if you're trying to just trade imbalances, you're like, oh, I got long, I got short, then you want to throw your computer out the window. But by watching what's happening as well in the deltas, okay, so, you got a lot of back and forth, actually, buying, no, buy, sell, no, buy, sell. But once you start seeing that directional trade wind down, right, in terms of the aggressive selling, there's still aggressive selling taking place here, but it's getting weaker and weaker, right? That's what this purple line is telling me. Now that's the time I could be taking the trade, right, off of the aggressive buying and the aggressive selling getting weakened, and it starts working its way up nicely. And again, when you're looking at market strength or market weakness, this is one of my favorite trades. That's why I put the star here. Is when you put things in context, right? Where should you be looking ideally for market strength or market weakness? Well, you want to be looking for when strength is appearing at or near a low, swing low, or low of the day, or for weakness when the market makes a swing high or the high of the day, right? Because what I want to know is if this move going up, even though it's going up, right, which is, what a lot of traders like to see, a market going up. But if you're just looking at price, you just see price making a new high, making a new high, making a new high. But if by looking at things like the delta, I could see that, yeah, it's going up, but the aggressive buying is falling off. It's getting a little bit weaker as the market keeps going up. So that tells me that, it's probably a good short opportunity. We're at a swing high, and as we were coming up into that high, that aggressive buying that was there to move it to a swing high is getting weaker. Because once that aggressive buying dries up, the market is probably just going to fall over, and it drops again really quick from 79.60 down to 79.10. It's a quick 50-cent move, right? That's this morning, just at 7:45 this morning in crude. So trading can be a daunting experience for many, but with the right set of knowledge and strategies, you can learn how to trade with order flow. And when you join orderflows.com, I'll show you some of my most valuable trading experiences to guide you and make sure that your efforts are optimally rewarded. So, we've covered a lot of ground in the last 45, actually almost an hour today, minutes. And you should know some of the ins and outs of order flow as to how to make smarter trading decisions. So if you're already using order flow and have some software, you can take away what you learned today, but there's a way to make it a lot easier. And unfortunately, I can't cover everything in a quick training session like this, because there's just so much more to learn about order flow trading. But I hope that now you can have a good understanding of the order flow basics, right? Things you should be looking for, in the coming year when you're trading with order flow. So I've got something special for you guys, right? If you really want to take your 2023 to the next level in terms of trading and especially in terms of order flow analysis, and it's the Order Flows Trader 6. So if you ever felt like you're struggling to understand something only to have it click into place and suddenly become easy, right? That's the power of understanding how something works. Once you understand the underlying principles, life becomes much easier. Not only life, but trading. So take trading, for example. If you don't understand how the market works and what makes the markets move, it's going to be very frustrating and confusing. So have you ever wished you could get inside the mind of professional traders and see what they're thinking? And with the Order Flows Trader, you can do just that. This groundbreaking software that takes the knowledge of order flow, my knowledge, right? The knowledge that I've gained over, 20, almost now it's actually going on 30 years of market activity, and put it into a software that is going to highlight it to you what you're going to see in the markets. Now, the big mistake many traders make is thinking that having the right software is all they need to be successful in trading. And this could not be further from the truth, because if you don't know how to use the software, it's not going to do you any good. And like I said, while I do have a software, the Order Flows Trader 6, I really don't like say I sell software. It's really about the education that comes with it, because you could buy order flow software out there for actually there's free versions of software out there, footprints that you can use. But honestly, if you don't know what you're looking at, it's pointless, right? That's why I focus more on providing education on how to trade with order flow. I want my students to be successful, and I know that starts with giving them the tools they need to understand the market. So once you have a solid foundation, then you can begin to place trades with confidence, and that's when the real success starts to happen. Now, this deal that I have is the Order Flows Trader Software 6, but also I include the education part, the Order Flow Trading course, which I normally sell for $297. This is the original course on trading or order flow. Before I created this course, there was no courses on trading order flow. Uh, as far as using the footprint, you're going to get it for free with my software. But not only that, you're going to get access to my Order Flow Inner Circle video series. It's a series of 56 videos that I made on advanced order flow tricks, tips, and analysis. And you can't buy this separately. You can only get it when you buy my software. So what you're going to get is the Order Flows Trader 6 software, which normally sells for $899, the Order Flow Trading course, which normally sells for $297, the uh, video series, which 56 videos, is normally sells for $497. When I did sell it, that's over $1,600, almost $1,700. But I realized, you know what, trading and learning how to trade from books and videos is one thing. It takes discipline and commitment. What I found very helpful to traders is live training, where you can ask your own questions. Mike, what does this mean? What do you think of this? What should I be looking here? And for the last 3 years, actually, this is going on 4 years now, 2023, I've been hosting live user training sessions each week where it's open for all users of the Order Flows Trader 6 to join, where I drive home what I see in the order flow for the past week. So you can ask your questions about areas you may be struggling with in your analysis or markets. And right now in the archives, there's 193 episodes, and it's free for all users to attend. Or if you can't attend, you can watch the replay in the archives. This is the archives. And some gurus out there want to charge you extra just to teach you how to use their software. I mean, that's ridiculous. You buy software, you should get some training on it, right? And I don't like that. And I've seen them charge up to $200 a month. Well, you got once you buy our software, then you got to join our trading room for an extra $200 a month, just so you can learn how to use it. Well, what's the point of that? So what I discussed today is just a sort of a small sample of the kinds of analysis that I talk about on a weekly basis. Now, this week, because of the holiday, there won't be a session tonight, but it'll pick up again next week. And I'll go into much more detail about all aspects of trading, not just order flow, but technical analysis, the fundamental analysis. I talk about the different strategies that I use, how to adapt them to changing market conditions, because most importantly, you want to make sure you're looking at what is current in the market in the sense of, what's working now and much more. So if you're serious about trading, then I highly recommend you get started now, right? Because, it's 2023, it's a new year. So you'll learn more about order flow in the weekly sessions than you thought possible. And as a special bonus for Investors Expos, I'll give you access also to my order flow playbook where I have 10 additional order flow trade setups so you know what to look for in the order flow. Normally I sell this course for $297, but you're going to get access to it for free. So what you're going to get is the Orderflows Trader 6 software, which is valued at $899, the trading course, which is valued at $297, the Inner Circle video series, which is valued at $497, the access to join in the Orderflow live weekly group trainings, which is valued at $200 a month. You get access to the Orderflow playbook, which is valued at $297. That's over 21. It's close to $2,200. The value of $2,190, but just for a one-time payment of $749. Yeah, it sounds a bit, and you get a pre-knife set. No, I try to keep it affordable. My programmer wants me to raise the price. I've been trying to say, I'd rather just get the information out there to people, and keep it at $749. But, I get a lot of pushback from others to raise the price. So, get it while it's still $749. Just go to orderflows.com/oft6.html. I'll put the link there in the chat. And again, there's no recurring monthly payments. I've seen these softwares. I've bought software where it's like, oh, it's, we're just going to charge you $99 a month. And then it's like forever. You even cancel your card or your card expires. Somehow they still charge you for that like months afterwards. I hate that. And, I don't, it's just a one-time payment. Now you will have to pay data fees, obviously, and any NinjaTrader fees because the Orderflows Trader 6 runs on NinjaTrader. And all you do is just go to orderflows.com/6.html, scroll down this page. It's going to take you to this thing here where you can see what you're going to get. All right. Again, my guys, my programmer wants me to raise the price to $999, but I'm still holding it at $749. You're going to get the software, the Orderflows Trader software, the trading course, the Inner Circle video series, access to the weekly live group trainings, access to the order flow playbook. Just click that button. It takes you to PayPal. PayPal processes your payment. I don't get your credit card. I don't want that information. PayPal handles it all. I do get notified. Now, do bear in mind, after you click through PayPal, it can take a few hours to get everything all set up because, to get access to the trading courses and everything, you have to manually go in and set that up as well as create your license manually because it's not automatic, right? You're getting a lot of extra bonuses in here. So we're usually pretty quick on it, usually within 30 minutes to an hour, but, depending on, we just had a holiday, so everyone was busy during the holiday. But again, just give it some time. Don't email me 1 minute afterwards saying that you haven't gotten it because it takes time to manually go in and give you access to all these special bonuses. So just get started now, right? Go to orderflows.com/6.html. Make sure you put the .html. And it's just $749 to get started. Now, if you want my book, I wrote a book on trading order flow. It's 150 pages. You're not going to get an actual hardcover copy. You're going to get a digital download. Just go to orderflows.com/book.html. It'll take you to this page. Enter your name and email, hit submit, and it'll take you directly to the download page. So again, get started with the Orderflows Trader 6. You get a great deal. Just go to orderflows.com/oft6.html. And I'll see you guys on the inside. So again, thanks for taking the time out. Again, it's January 3rd. It's just the third day, really the first business day of the new year. And I hope to see you guys, on our weekly sessions, so you guys can become better traders and improve your trading knowledge. So thanks everyone for taking the time out, and I'll see you guys on the inside. Bye-bye.